All right, investors, what's happening? Energy Fuels is the play when it comes to the uranium bull market. It's been underway now, and I'll tell you why. We're going to talk about the uranium market a little bit. Energy Fuels is going to take an in-depth look at the company, at least as in-depth as I can get out here on the internets. And I'm going to talk about their numbers, their plans, what they've been doing, what they're up to, and of course, we're going to talk about valuation, what the company's worth, what it's priced at right now, what would have to happen for this valuation to be realized and to actually be a good deal for investors. Are there any other kinks in the company? Like, for example, its monopoly on US licensing and things like that, especially when it comes to their operations, when it comes to converting material. And we'll mention that as well as some things that have been mentioned on the earnings call. I really appreciate, by the way, that their leadership team is very transparent with what's going on in the company. They're not afraid to put figures on there, forward projections. Speaking of forward projections, make sure that you do your own research and due diligence on every company. This does not count as your own due diligence and research. This is my due diligence and research and research. So make sure you do your own. What was the saying? You can lose money in the markets. Anything I say is not recommendation to buy securities and is also not financial advice. So moving on from that, I have a list of notes that I'm going to put up here publicly. Before I do that though, I don't do edits. All right. So make sure you grab a drink, sit down, relax, get used to this. You know, there's going to be some ums and a few pauses in there, but that's okay because I want to dish out a lot of information. All right. So here are my notes and I'm going to be bouncing around between them. I'm not going to go in order. So you can read through them if you want, but I'm going to, like I said, skip some and then come back to it. I have a separate note that I'm reading from. So, okay. Look, first of all, Energy Fuels is, let me hide this for a sec. Energy Fuels is a mining company, primarily. And mining companies are extremely risky. Okay, we got to start the story from there. So for most of the history, mining companies actually lose money. So if you don't believe me, Energy Fuels is one of those, even if it's one of the safest ones at the moment anyways. If we look at this little box right here on the right, you'll see that financial performance, revenue and earnings. This is, by the way, stockanalysis.com, not affiliated with anyone. So revenue and earnings, you can see that every year they lose money. So imagine owning a business, besides, one, they made a tiny bit. Imagine owning a business where you lose money every year. Okay? That's kind of what mining companies are. They're money losers for sure. However, they provide a leverage bet on the price of a commodity because that's the nature of the business. Okay, so you, as a miner, you basically wait 10 years, 20 years for your commodity to spike. You set contracts, you sell a bunch, and now you make up in profit for all those losing years. So in a sense, it's kind of like buying an option on a commodity where you keep bleeding money in anticipation of that big spike. Investing in mining stocks is extremely risky, to say the least. Even the experts, the most smartest people, the most attuned to the markets lose money investing in mining companies all the time. So, and if they don't lose, at least they bleed a lot of money. So just keep that in mind. Make sure that if you do invest, it's with a small portion of your account. Would not recommend investing in large sums in companies, even as safe as this one. And we'll talk about why I think this is a very safe company. Okay, so let's go through the numbers here real quick so we can get a picture. I also have the 10Q pulled up, so I'm going to read a little bit off of that as well. This is the revenue figures for the company. Obviously, in the fallout of the 2011 Fukushima crisis, the big earthquake where a bunch of the reactors shut down in Japan, there's been a negative move in the whole entire uranium space, not just because of negative sentiment around uranium energy production to begin with, but also actual plants being shut down due to political reasons or risks from other earthquakes. Even Germany shut all their nuclear production. Other countries did as well. US has been phasing out. However, there are some countries that are full steam ahead on nuclear production and are trying to get into the clean energy of nuclear, like India and China, to name a couple big players out there. So that's, it kind of, the revenues here kind of follow the story a little bit globally, because uranium is a global commodity and the price is tied to international supply and demand. Even though it's such a sensitive commodity, it's still traded internationally. It's a little more difficult, but if there's enough price incentive, things tend to happen. Now, in quarterly revenue, you notice a spike here, and that is aside from the recent sale of an asset that Energy Fuels experienced or executed. They recently sold, I think it was like Alta Mesa or something like that, an asset for about $100 and something million dollars, and half of that is cash and half of it notes they're going to be collecting interest on. So for the remaining of whatever the contract is, so this net income figure here reflects that number. The revenue was only about 18 million because they actually won a contract from the US government to replenish some of the government uranium reserves. As one of the only US producers out there, Energy Fuels has a bit of an edge, right, when it comes to that. Not just a bit of an edge, they have a bit of a monopoly. There aren't that many other uranium producers, and it's even harder for them to find projects. So for the most part, they're just kind of sitting on their hands waiting for the uranium price to spike up so they can release some of their reserves at the right time. But Energy Fuels actually produces continuously. For the most part, they don't have actual from the ground production planned for 2023, but they do have about 1.5 ton. Is it million pounds or tons? I forget. Anyway, it's a large number. I think 1.5 million pounds of uranium in various production stages, and about 900,000 pounds of vanadium, which is a commodity they've been selling pretty aggressively now. About 37% of their sales is vanadium, as opposed to, back then, some time ago, Energy Fuels used to be a pure uranium play. Moving on from that, one thing to note here is shares outstanding have been flatlining, which means that they have not been issuing new shares to dilute the current shareholders, which means you are still owning the same part of the company you did like more than a year ago in 2021. Because of the spike in price, this is no longer necessary, and because the sale of the assets has become a big cash infusion, the company does not have to tap investors continuously for new survival capital, if you want to call it that way. So that's really good news. On top of this, on top of flatlining share issuance, this company also holds no debt. It holds no debt, and that is really good news, especially in today's environment. You can see here it has 1.3 million of debt. The story was much different in 2015, 16, 17, when 15 was really, really the low of the commodity cycle. I mean, that year was brutal. So I can see how they acquired some debt just to stay alive. No debt is good news, especially in today's high rate environment, and they won't need to tap banks for financing unless things really, really go crazy in the uranium market, which it could. It's possible. We'll talk about the state of the uranium market towards the end of the video. Obviously, the company pays no dividends, mining company. They could if they become really big and they have really steady income, but as of right now, that's not the case. It's a small company. All right, so Mark is the CEO. So I really appreciate his direct communication approach on his calls, and I was able to get a lot of information from that, thankfully. And here are some of the topics that I'm going to talk about here. So I already mentioned the 1.5 million pounds of uranium. I'm going to move into now the state of Energy Fuels. I'm going to talk a little bit about the company, where it's at, where it's headed, and then we're going to circle back to the uranium market and then valuation. All right. So I already talked about, let me put the notes here, the 1.5 million pounds of uranium in various production stages and the vanadium. They're also producing various other rare earth metals. By the way, I'm kind of excited when I talk about mining companies, because that's kind of like what I did mainly from the periods of like 2009 to 2016. I was just kind of concerned with mining companies. And now that I'm finally owning a mining company again, it feels good. But for those of you who are interested, sometimes I'll do episodes on my channel where I update a public brokerage account, and you may see the energy fuel company reflected on there. Currently, I only own a few hundred shares and about 10 or 20 call option contract leaps that are far dated into the future in case things really heat up in the uranium market. So that's my position, full disclosure. It's relatively small, but it has been really big in the past. All right, moving on. No production of uranium planned until 2024. They plan on starting one of their facilities in 2023-24 to replenish some of their supply. Currently, they have an outflow of about, I want to say, 250,000 pounds per year. That could kick up based on what the utilities and whoever else, I don't know, the government wants to buy more uranium for some reason. So the thing about uranium is that the list of clients is very short. Like, you either got storage funds, other uranium producers and companies, the government, or utilities, and that's about it, because no one else really is allowed to touch this metal, no pun intended, radioactive. So it's a very, very niche industry, and that's kind of what attracts a lot of people to it. And there's way more information on uranium out there on the internet. There should be for such a small market. So, but it's very volatile, and some may argue that that volatility is set to resume here in the near future. We'll talk about that. Now, here's an interesting thing about Energy Fuels. Even though they're not producing uranium currently from their operations, they are mining rare earths. And uranium is kind of a byproduct of those rare earths. So they're still kind of restocking their supply, even though they don't have a dedicated uranium mine operating at the moment. So that's kind of one unique feature of Energy Fuels that other uranium miners do not have, is Energy Fuels is not just an option on uranium. This kind of exploratory, mining procedure, even though they're actually getting some revenue and money from it, has hurt companies in the past. So it is not just all good. It's not like okay, they're branching out, they're gonna make a bunch of money from rare earths in the meantime. That has tended to be a drain rather than a net positive for mining companies in the past. Has served as a way to kind of raise funding because it sounds good to investors, right? It's like, oh, well, we're going to get into vanadium business. We're going to get into lithium. You guys remember the lithium spike where a bunch of companies went into lithium, bought a bunch of, assets, minerals in the ground to try to mine lithium, and then only to find out that it's uneconomical, and now the company collapses. So there's a huge risk in that, and that's one of my main fears with Energy Fuels. They recently bought an asset in Brazil that has, that they have, 60 square miles of mineral concessions there. Good thing I wrote that down. And, it's part of their play. They sell one asset, so they buy another, and we'll see how it goes. Currently, I think they're spending about $3 million last quarter, at least, on exploration, which offset some of their profits. I have the breakdown in the Q10, but it's kind of boring. We're probably not going to go through it. But anyways, that's just one of my main fears. Actually, it's a huge benefit, but it's also a huge fear. Like, are they gonna blow through this 140 million dollars of cash that they have in the bank, various forms? 60 million of cash and then another 80 million in like cash equivalents or alternatives. Are they gonna blow this? And are they only going to rely on the income from the recent contracts plus the 8% yielding notes from the recent sale? Like, that's a big question. It's a big question whether or not the management is making the right the right decision. I'm not the one questioning the management, right? Obviously, they're much more experienced and knowledgeable about everything than I am, especially their own company. They have an inside view of what's going on. They have a better touch on the markets. I'm just an outside observer and an investor trying to educate myself and sharing my pursuit of knowledge with you guys, just to bounce some ideas and maybe get some feedback and perhaps learn from you. So if you have anything that you think I'm getting wrong, or you have some additional data that you think would help me make a better decision, please write it down in the comments so we can all help each other here. We're out, it's hard to find unbiased information and analysis out there, right? So the CEO seems really genuine, and I like him, but he's very biased, right? He's always going to put his company first. They do have interest in the company, the management team, so that's great, and it aligns the interest with investors, so that's terrific. But still, unbiased analysis is very, very difficult to come by. All right, so moving on. Another reason why I think Energy Fuels is the play for the uranium market here is because they have a little bit of a monopoly. They also have, because of these contracts that I mentioned, like the notes and the continuous sale of uranium to the government, they have kind of a floor, and also their cash position, they have a floor in valuation, right? Energy Fuels has a floor in valuation, so I like it better than other US-based producers because of that. And speaking of US-based producers, Energy Fuels is a bit of a license garden. Okay, so what I mean by license garden? Well, it's very difficult to get licenses and permits and permissions to operate in the uranium space in the United States. I don't know how it is in other countries. I'm sure it's very similar. It's not that easy, right? It's because of its ties to nuclear enabling materials. I don't know how else to put it. The subject's very sensitive. It's very difficult to get licensed to produce and operate in that line of business. And for many countries, the entire production of uranium is government operated, right? Or it's got like this kind of pseudo government entity mining company, namely Kazakhstan and other big producers in the world. Speaking of big producers, if you want to see an entertaining graph on the production of uranium, here it is. So this is basically production over the last 70 years and how it's spread out. You can see Kazakhstan is a big player here. As of late, Canada, is the second biggest producer at the moment. Australia is probably third, and you can see that US doesn't really produce much anymore. Actually, this chart goes a little bit further to the right, where US shrinks to almost nothing. So that's just an entertaining graph for you to look at if you want. You can pause and absorb this information. But uranium production has definitely changed drastically over the years. Okay. So, continue on. We're talking about White Mesa Mill. Okay. So the White Mesa Mill is an Energy Fuels asset. Okay. It's a mill. It's where they convert one thing to another, basically, and their capabilities are actually second to none in the United States. They're the only mill that can do what they do The abilities that they have are unique. So if there is some kind of nationalistic guarding off between U.S. and Canada, because Canada is basically U.S.'s little brother or sister, and the relationship there is very good. And of course, in Cameco lays the biggest Western producer of uranium, Cameco. Now, Cameco, their management team, they're just geniuses. Okay, so they're very, very good. I've made videos on them before. I've owned Cameco before. But right now it's 3 times the price of when I initially bought it. And it's a large company, so I don't know, given a big bull market in uranium, if Cameco is going to be the play. It might double or triple from here, but I don't see it having as much as upside as Energy Fuels, and I don't want to hold mining companies long term. That's not the name of the game. It's not an asset you buy and then hold for the next 20 years and compound interest, right? This is not a compound interest kind of investment. Don't do that, all right? If you want that, buy treasuries, I don't know, buy REITs, I don't know. There's plenty of other investments that you have the ability to compound. This isn't one of them, all right? Okay, so White Mesa Mill, unique asset, and it's probably worth a lot, right? I mean, Energy Fuel has it. It's only one. It's hard to put a price on it, right? But if the company were to go in liquidation, I mean, I'm sure plenty of people would be willing to pay big bucks for this asset here, and the expertise and the knowledge and the operation. So it's a very kind of a floor thing, again, something else that adds to the floor of the valuation of the company. All right, max capacity without added investment in 2 million. Okay, so Mark, who's the CEO, talked about, he got a question on last earnings call. I'm going into valuation basically here. We're going to talk a little bit valuation. He was asked what the maximum capacity for production is right now if uranium prices cooperate. And he threw a figure out there. Obviously, this is just guesstimation and speculation, but he threw out a 2 million pounds per year figure of production they could do. They have a ton of pounds in the ground, no pun intended, more than a ton actually. So they can ramp up production to about 2 million pounds per year without seeking outside investment. But I think, outside investment is going to be very, very easy to get if uranium prices are shooting through the roof. I mean, if they go over the $80 mark, and I mean, the skies are open from there. The sky's the limit from there. The reason I say 80, here's why I say 80. Okay, so hold on 1 second. So the current price, I have it ready for you here. The current price of uranium is about $50. It was 53 earlier. But there are different prices, spot price and average, whatever. Running average price. So this is a numerical version of it down here. And this is let's see, which one was it? This is the long run price of uranium here. Let me see if you can see it. Oh yeah, you can see it. Perfect. The reason I say it's because there seems to be obviously a ceiling to the price of uranium around the $70 level here, between 60 and 80. And the reason I say that is because there is a ton of uranium out there still, okay? But people are starting to hold on. There are no more aggressive players, like let's say Japan, who's looking to get rid of all of its uranium reserves and flooding the market with it after the Fukushima earthquake. So this is the dynamic is no longer the same. However, even though there's no aggressive outflows and people are not going to be selling uranium at $40-50 per pound anymore, if the price reaches $60 or $80, somewhere in there, there's going to be all kinds of funds selling into that demand. And so that's going to put a temporary a ceiling on the price of uranium. It's going to be a pretty hard resistance to overcome. Investment funds have them. These things didn't exist back in 2007 and 2011. These funds that hold physical uranium, they just didn't exist, right? It was just whatever miners have on hand, and they had kind of the only play in the hands. They could manipulate the price if they say no, like players like Cameco, whatever. And now with the Kazakhstan production, flooding the markets as well. Even Kazakhstan, I remember when I was looking into uranium in great detail, was becoming more conservative about the figures they're putting out into the open market. So, there's a lot of production capacity and a lot of tons of uranium out there being held, ready to unload in the market. So it's not like, the price is just going to shoot from here to 150 or 200 or 500. Like, all that supply has to be spent first. So there would need to be a huge deficit, in the short run if that were to happen. And it would have to catch a lot of people unprepared and sleeping at the wheel for that to happen. So I don't anticipate it. With the amount of players that are out there in the uranium space right now, I can't anticipate the price going from here to 150 in like the last few months. I don't think that's, but I do think it's possible that we start bumping against that $60-$70 area where a lot of contracts can start getting negotiated and some of that physical uranium gets spilled into the open market to satisfy that actual demand rather than just investment demand, which works the opposite of the price, right? So that's kind of the market evaluation of what's going on and what's going to happen. But bringing it back to energy fuels, he also said that Mark, the CEO, said that with additional 300 million of capital, the production can be kicked up to 5 million pounds or so, which is quite a lot. I mean, if the price of uranium is, let's say, $100, which would incentivize them to actually seek additional capital to bump up production. Just a quick calculator math, because my brain doesn't do math very well. I need help of computers and AI. So with additional 300 million, it's 5 million pounds. So 5 million times 100. I just don't want to make a mistake. Okay. That equals to $500 million. All right. I know you just add a couple zeros. Okay. Stop it. Stop. What if I said the wrong figure? All right. So $500 million, 1 billion is the market capitalization of energy fuels. If we go to statistics, you'll see that $952 million is the current market cap, enterprise value of 800,000. So the entire market, the half of the entire market cap can be satisfied in revenue if uranium goes to 100, which is kind of unlikely scenario, and they seek an additional investment and they cap out on all possible production, all full steam ahead, which is also very unlikely, right? And that's only going to contribute in revenue to half of the market cap of the company. So even though I said that there's a lot of backstops in the value, on the valuation of the company, right? Things like the mill, like their properties, like the current assets, like the sale of the notes, for example, their cash on hand, their mill, right? Their licensing, their unique position, unique relationship with the government, their monopoly in some ways on some type of processing of unique elements and isotopes and whatnot. So although that puts a backstop on the valuation of the company not to go too low, it also will take, an extraordinary amount of price in order to be able to have, price to earnings ratios below 5, which is kind of like what defines a mining company, cycle, right? Like at current price anyways. Like it's gonna take a lot. It's not gonna be easy for them to make. Right now, they had one of their best quarters, right? And they just made $18 million. I'm not counting the sale. And there's still a lot of costs associated with those revenues. Like they're paying. Okay, let me see. Hold on. Let's go to financials again. Let's go to the quarterly revenue of 19.6 million and net income of operating income of minus 405k. All right. So even though they made uranium and vanadium sales totaling about 18 million, they actually operated at a loss. Okay, they lost money doing that, even though that was a great quarter for them. You see what I mean? Like 3 million of that was exploration, etc. Then they have admin and whatever expenses, all kinds of expenses. In fact, I have a list of them here in the 10Q. You can't really see it because I'm not gonna move the screen. Okay, I have the 10Q open here. You're not gonna see the figures, but I can't really move it at the moment. But over here, the sales, it says 18.4 million. If you want to find their 10Q, you can find it on stocknots.com, or actually you can go to their website over here, and you can just go to investors, go to SEC filings, and then find their latest 10Q and click on it. Okay, so click like this, and you go all the way down to the 10Q here. All right, click HTML format, and it will open up a tab that you can look into if you're inclined and you want to study their filing yourself. But you can just listen to what I'm saying, and it's 18.5 million of uranium sales, and then another almost million for vanadium sales, and then alternate feed materials, processing, and other revenue of 272,000. So the costs applicable with the revenues, though, are very high. Very high. So first of all, they spent over 3 million in exploration, development, and processing. They have 2.2 million standby. Accretion of assets, retirement obligations, 346,000. Selling, general, and admission, right? This is the big one here. $6 million of expense, netting them an operating loss of $405,000. So this is why mining companies are so tough, right? Best quarter, and we're still not making any money. You see what I mean? All right, we got to move on. Where's my notes? So that's kind of the direction that Energy Fuels is heading at. Some things to comment on about the uranium market and why so many investors are attracted to it. The utilities, okay, basically the nuclear plants that operate with uranium are not very price sensitive. Unlike regular commodities where high prices will necessarily, come down because the demand decreases. The demand is pretty static when it comes to uranium, which makes it a very, very niche and unique material, because the current plants absolutely have to buy basically at any price, and they won't say no. They're not going to shut down the plant because uranium is $200 or $300 or $1,000 or even $5,000. They'll buy at any price. At any price. So it's very much a supply driven market. And as long as there's supply and willingness for people to sell at a price, then that's what's going to determine the spot price of uranium. And therefore the profitability and the direction that a lot of these miners or uranium holders take. So if you really want to understand the price of uranium, you gotta just really hardcore focus on supply, because the demand figure is going to be fairly static. It's very public. You know it. You can kind of guesstimate it. You can work it out. But the supply, there's a ton of, I keep saying ton. There's a large amount, okay, of uranium supply out there right now. People have figured out how to store it. Miners have, figured out how to turn on their operations quickly. They have storage of uranium themselves. Utilities store uranium. They can sell from one to the other if they have to. So it's a much more liquid market now than it was 10, 15, 20 years ago. So that has to be kept in mind, So when it comes to like the large spikes of uranium pricing, I don't know if I necessarily see that in the near future. We would have to break that huge wall of resistance in around the 70, 60, $70 mark, where most of the supply that's out there will start flooding, at that price, and the market will become very liquid. But if we are able to break through it, it's my last note here, the resistance level. If we're able to break through it, then I think we're off to the races. I mean, there's no limit to how high uranium can go if it breaks that area, because it will tell me that all the excess supply, barring somebody who's just sleeping at the wheel, which probably won't happen. All the excess supply is gone. It's gone. And now the uranium market is emergency mode. I think that's one of the reasons why people like to keep how much they have in uranium a bit of a secret. Although it's very hard to do that in today's world. If there's not a legal requirement to disclose it, there's a fight for transparency and all that. So anyways, my point is that is the key level to be looking at. I'm not a technical analyst, okay, but I do understand that part of the market. So look for the price. But if you decide to buy an energy fuels or another uranium producer or uranium spot price futures or a fund that holds physical uranium or something like that, and you're waiting for the price to go past 70 before you buy, you're going to be too late, because it could happen in a day. I'm really serious. Like if it passes that $70 mark, $80 mark, and it goes up to like even 85 in just a tick, everybody's going to start buying. Because that means there's just no more uranium to be found anywhere. And that's the signal for the miners to start going full steam. That's when a ton of investment is going to come into the place, because everybody knows that mark, and everybody who is knowledgeable, able, and willing to make some money will do so. So I wouldn't wait for that to happen, even though I don't see it in the near future, maybe another 6 months at the very least, because there's still a ton of supply, a year or even 2, but the risk of being too late is probably greater than being too early. So for right now, I don't know how long I'm going to hold my position. It's very tiny at the moment. I might stack up more shares if the price drops. I might buy more calls. I might refresh that, because buying a call options in a mining company is kind of like buying a call option on a call option, right? So the potential reward is enormous, and the risk is losing the premium, which is very akin to holding the mining company outright, except a high octane version of it. All right, I've already gone 40 minutes. I don't know if you found this useful or not, but if you think I'm missing something important, please write it down in the comments. Not just for me, you're going to be doing me a favor, but also for anybody else that's listening or watching, and help them learn, help me learn. Let's do this together, because we're the only people who have an unbiased view on the situation. All right, everybody else that's involved, they're always pushing some kind of an agenda. Even if they're being 100% honest, there's no way to tell. Plus, their prediction might be guided by rose-colored glasses, right? So, like, if you're in the business, of course you're going to be optimistic. There's no way you're going to be pessimistic. Even if that's what, you wouldn't be in the business otherwise. You see what I mean? So by default, by definition, people who are involved in the business are going to be optimistic. So we have to find other ways to gather realistic information. So speaking of valuation, right? Let's talk about that lastly. So here's the long-term chart of energy fuels. The price actually didn't go all the way up to like whatever it is. What's this ticker here? 234. Is all of this is basically because of dilution, right? But anyways, the valuation of the company 952. It's hard to put a price on all their assets, but like I said, there is a bottom. The bottom is probably somewhere around in the few hundred millions worth for the company, and then the top, if the thing goes past, if the uranium goes past 70, 85, then and it's off to the races. I mean, there's no limit how high this can go. I mean, we could see like the stock go to 60 or even $600. Plus, one thing I forgot to mention is this company has a market component to its existing contracts when they sell. So don't think of it as like static income. The price at which they sell uranium is going to be a little bit tied to the spot. So their income going forward is going to vary a little bit based on that component. So just make sure that you know that when you're trying to make some kind of calculations of whether or not this is a good investment for you. But 952 market cap, a backstop of around 200-300 million. The company, they have a lot of assets. Even if it goes down below that, it will bounce back for sure. And I mean, I think it's okay if you lose 2/3 of your investment and it's a very small percentage of your overall portfolio. Then that's not that big of a loss, and you still get to retain that uranium option for years to come. The cash, if they don't blow it on the rare earths operations, is gonna have the company maintain at least an emergency like dormant mode if they have to go into it for a very long time. So you retain that long-term option on uranium, whilst you limiting the downside, is what I'm trying to say. All right. So hopefully that helped. Like I said, leave some comments if you got some additional information. And yeah, I'm just looking to make some money off of this. Hopefully you and I make some money. Again, I don't know when I'm gonna exit my positions. Maybe I'll just leave a little bit and try to ride it all the way to the top. Although I do like to keep my account kind of clean. So we'll see. All right, an option on uranium. Best way to play an upcoming bull market in uranium energy fuels. Peace out.